All right, let's broaden out the conversation, talk a little more about what Jerome Powell's comments could mean for the markets, really the currency markets. Bring in Jens Nordvig. He is CEO and founder of Exante Data. Jens, good to have you on the program.
Thank you.
You know what else has happened?
No, what?
Besides your Swiss yields, the dollar has collapsed against the euro. It's been one of the most rapid moves of the U.S. dollar in months. What is that telling you?
So this year has been extraordinary. My company specializes in tracking capital flows, and that's where the big signals has been, like a big asset allocation shift.
From what to what?
Away from dollars in international portfolios. Like you can see how European equities have performed, right? Big outperformance. That's because people are allocating more to European equities. So we saw that very aggressively from March to June. And now it's less clear, right? So in the last 2 months, right, it's looking a bit more normal from a first half that was extremely unusual. And I think you're right to focus on the Fed now, because I think after this big sort of highly unusual asset allocation shift, we're going back to think about the Fed again. And the next leg for the dollar is going to be defined by what the Fed is doing. And we just talked about it. Is it unemployment they're looking at or inflation? Right. It's a very tricky balancing act here.
But Jens, so curious to hear more, though, about the fund flows and the asset allocation that you said was really more of a phenomenon maybe of 2Q, not necessarily 3Q. The dollar's been sideways since April. I mean, let's be clear. We got to $1.15 euro in April, and back to the central bank differentials that you're saying will define the next move in the dollar. You know, at this point, I think it's somewhat unknown. My question really, though, is do you think that these fund flows to European equities and out of dollar-based products are coming from the rest of the world? Do you think this is U.S. investors that are overweight here thinking about the rest of the world more for the first time?
I think you can see some very clear patterns in the data, right? Europe was early in this because they also had the big German fiscal push in March, right? That got the euro moving. And then actually, if you look around the world, Asia kind of was a second chapter. They moved really later in the year, right? So June was when they really peaked out, right? So the euro hasn't moved that much since, you know, early Q2, as you point out, right? The Asian currencies moved later. But overall, the dollar has now stabilized for the last 6 weeks. And we're looking at the data. Is the labor market going to force them to cut? I think it's down to that. The inflation picture is not clear.
But what do you think? Let's answer your own semi-question.
I think the inflation picture is highly problematic. Like, everybody looks at every single inflation report, right? And then after the last one, there was like sort of a lot of people wanted to run a victory lap saying, oh, we don't have that much inflation. But don't forget, tariffs actually came down a little bit after being super high in April, right? So when we look ahead, we're going to have another tariff shock where actually tariffs are going up again. So by October, that's when that is going to be really feeding in. So does the Fed want to be super aggressive? I think what is most likely is that they do, you know, a pretty hawkish cut in September, a little bit of insurance cut, but they are not going to be committed to be on a multi-cut path because the inflation picture is just too tricky for them.
Let's go back to the dollar real quick, because this administration, the Treasury Secretary is saying the quiet part out loud. They want the dollar to be weaker. Make no mistake about it. I mean, this is a policy thing. And be careful what you wish for. My question, though, at what point does it matter to the equity markets?
Yeah, so I've been connected with Scott Besson for many years. He was one of my first clients when I launched Exante Data, right? And he certainly has views on the dollar. But how does the U.S. really influence the dollar, right? The U.S. doesn't have reserves like China has reserves where they literally set where the dollar is. So it's kind of more down to verbal interventions, not that they can just say, OK, we want the dollar to go there, and when we spend $1 trillion to get it. So it's going to be more tactical, I think, how they impact the dollar with their verbal rhetoric. And eventually, it's going to be up to the cycle. Like, what is the cyclical state of the U.S. relative to the rest of the world? And it will be very odd if it's not the case that this big tariff push is going to be paid for mostly by consumers, and therefore consumption is going to shift down a gear when we look towards the end of this year.